All right, so tonight's lesson is going to be on seasonality. This is a tool we're going to use to just help us find our directional bias. So, just like how if you go to look at the chart, right, you just look for your market structure. We're going to take it a little bit step further and just look at other key things that will help us find our directional bias. We do follow the market structure, but we can use the seasonality and the trader's outlook to kind of see the areas we should be looking or the direction we should be looking for price to go. Winston says, is there a trading plan or rules template? Yes, I can post it in the group. That's going to be what we go over tomorrow. And then we're going to start doing like full top-down analysis, step by step by step, following the trade plan together and doing Q&A. So this is basically the last webinar that is extra confirmations, right? I showed y'all the liquidity, I showed y'all the setups, then we started looking at confirmations we use, and then we're basically tomorrow we'll have our trade plan and then tie everything together. I know I didn't do a webinar last night, so don't think y'all are missing out on a day. Like I said, we'll have many days like we can go over. It's not just specifically 10 days. So, don't feel like, oh, he didn't do a webinar, we missed out. So definitely don't worry about that. I definitely will take care of y'all and we'll keep doing webinars. But the first thing I want to look at is Equity Clock. So if you go to equityclock.com, this is a subscription service. Some of these will be free, but you have to sign up. But I'm just giving y'all my login. So like I'm paying for it. Y'all can just use the email and login. Should work. I will post that in the group. So you'll have the login access. You'll just type in my name and email where it says login. You'll do the email and password and just log in. So I think it's like $50 a month or something if you wanted to get it yourself. But equityclock.com, what this is going to show us, and this is for stocks, this is for everything. There's all kinds of like articles, crazy, all the information you need in the market is going to be on this website. But what we're going to be looking at is the seasonality. So if we go to the Forex tab here, you will see now we have these charts, right? Euro seasonal chart, NZD seasonal chart. And remember, these are compared New Zealand dollar to the US dollar. So what you want to be doing is opening this chart, and this is giving you the 20-year range average. So this is the last 20 years average price action. So for the last 20 years, you can see in June, right? We're going to start with June. Price rallies up. Let me change the color so you can actually see it. Okay. So in June, euro is usually pretty strong to the dollar. And then I would say around the 10th maybe, or the end of the first week, it kind of pulls back and bottoms out. So let's just say at the 10th, it starts bottoming out and then starts making its way back up. And then right around now, I would say this is probably like halfway through the month, right? If we split this in half, right? So this is like half of June, right? So let's just say from the 14th through 17th or 18th, you can see euro is dropping, right? So the last 20 years it's done this. So we're just expecting it to continue to follow this. So let me clear this. So now what we do, we say, okay, we're halfway through June. Right around halfway, euro is dropping against the dollar, right? Euro dropping against the dollar. Another one we can go look at, the actual US dollar is going to be under this currency under the futures market. All the other ones are under Forex, but the futures one, if you go to currency, you'll see these are based on the futures market, so like relative to gold. But what we're looking at is the US dollar index right here, okay? So we want to look at this. So you can see in June, beginning of June, price starts off super bearish in June, right? Super bearish in June. And then let's go look at the price action. Okay, let's look at dollar index. Okay, let's go to June. All right. So do you see how bearish this is? So like, all right, let's go back to this real quick. So basically from the middle of May, the dollar was in a downtrend to about the end of the first week in June, right? So that's this. This is May's downtrend. And then right around June 10th, you see this correction. Okay. Let's go back and look at this. Right around in here, a correction. And we could look for price to now make a double bottom in here, middle of the month. So that's basically what we are looking for. It's just helping you align it. So let's go look at another one. And real quick, to answer the question in the chat, Patrick asked, can you show us why we use the dollar index? So the dollar index is specifically just the strength of the US dollar. So on here, if we have the seasonality that dollar is bearish, and then we go to our price action, dollar is bearish, we should be looking for sell setups. If we're looking at sell setups on the dollar index, that means we're saying US dollar is going to be weakening, which means we should probably be looking for, US dollar Swiss franc sells, Euro USD longs, NZD USD longs, right? XXX USD should go up if the dollar index is going down. So it's just helping you confirm your directional bias. But let's go look at like Australian dollar to USD. So that would be under Forex. And right here, we're going to look at this chart here. Let me clear the drawing here. All right. So right around June, we have super bullish. So let's go see if it's followed it. Okay. So basically the end of May, and then we're just looking from June. So June 1st, we have the bullish trend. And then right around June 10th starts a correction. So probably would be this correction here, right? Middle of June, you see, start pushing back down. And you see how it starts doing these little retesting, right? You can see the little downtrend in there. And that's what this is right there. But how we want to actually use this to take our trades. So we know AUD USD is kind of just choppy in here, but right here in June, let me circle it. From middle of June to the end of June, we have what? Downtrend, right? And you see how it's even like doing a little pullback up, come down, pull back up, come back down. So the last 20 years at this specific time in June, Australian dollar was weak to the US dollar, okay? Then we want to go to our chart. Okay, so we know we're looking for sells. That's when we go here to our chart. And we say, okay, we should be looking for sells. First thing we're going to identify, let's do this. Let's just act like we see this. Okay, so we have this downtrend, and then we have nice little bullish pullback. But we know that this huge wick up here has trapped a lot of liquidity, right? This high here, these high here, this grabbed a lot of liquidity. So we should be looking for some liquidity levels under that, especially if we're looking for sells, right? So our directional bias is sells. The only thing we can really do right here is just mark maybe these equal highs because there's no trade setup yet. There's nothing to be selling over here, nothing like that. But we would wait. We're just waiting for a sell setup to present itself, right? So we would wait. And then once we saw something like this, we would say, okay, they're going to be grabbing liquidities above these highs. But if this closes bullish engulfing and we're looking for shorts, remember we cannot sell until price closes under this. Once it closes under it, that's when it validates that this is a kill shot to grab liquidity. So we're just marking stuff up. Again, we wait. Next hour candle, starting to trade back down. And remember, you don't want to be buying here because our directional bias is short. They're grabbing liquidity above the highs. So that doesn't make sense to look for, a buy when we know we're looking for shorts and they're grabbing liquidity. So then we wait. Still nothing. Still nothing. And then we see price do this. Once price closes below, we highlight that institutional candle. This is our bullish candle that grabbed liquidity here. Get this over. There we go. Okay. That's the bullish candle that grabbed liquidity. That's our kill shot. This is a kill shot setup. Down move, big bullish move up, grabs liquidity, price then trades under it. Again, kill shot. So we can enter at the open or at 50%. Here's the open. It's already marked. And then there's the 50%. Remember, these wicks don't count because it's not valid until it closes under. So we're looking for sells here or here. Now this is our chart pattern. We have our directional bias for sells, we have our liquidity grab for sells, and now we have our institutional candle for our specific sell entry. Looks like it's trading away. Don't worry. When it retests, we're looking for sells. Okay, now we're like, okay, a little bullish retracement. Looking good. Looking good. Missed it. Boom. Okay. Wicked the 50% perfectly. And also hit the open here. So worst case scenario, you have a sell there, stop loss above this high, right? And then we would be targeting down into these lows. So there's our sell entry. Straight into profit. Wick entry, can't get any cleaner. Next candle, after hitting our entries, closes in profit. Huge sell-off. See how they held it from going? And this is following our directional bias. Bearish end of June. Bearish structure, little retracement, equal highs, grab liquidity, institutional candle, which is our kill shot. We can enter at the open. We can enter at the 50% with stop loss above the high. Wick entry to the pip at the 50%. And then from the open, you had about 15 pip drawdown. So not too much. Okay. Also note that liquidity was grabbed here. And then also, if we really look, there's some highs in here. See that? 1, 2, 3 highs. Down move, bullish move up, hit our entry, price trades under it. That means if this is our entry, our next entry could probably be right here. We also note the imbalance. Let's go ahead and just highlight this institutional candle first. That's our focus candle, right? Okay. And then we have our imbalance, which is going to be the wick right there as well. Okay, so now if it does retrace, we could sell again right here. Price dropping, retracing, 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 retracing. Starting to create some equal highs. Okay, now starts hitting our second sell entry. This is how you can compound trades. We have our first sell up here, risk-free. Maybe we took some profit after that drop. Now we have our second short here, stop loss above this high. And we're still targeting, down there. Okay. First entry is risk-free, second entry perfectly wicked. Another big sell-off. So now you should probably have it risk-free. And this might have hit it, it looks like. Yep. Might have stopped you out at break even, depending on how you traded. Okay, and price is currently here, making it made new equal lows. But y'all see how all of that just lined up together from this seasonality, giving us our directional bias. Then we have our downtrend here, our liquidity grab, and then our institutional candle. Do y'all see that? Did all of that make sense as I was walking through it? I know it's going to be hard to kind of grab it all together at once, but that's why we're going step by step here. Very clean, right? Let's go look at odd yen. Had all of the same setups. I'm not going to go step by step like that, but equal highs here, equal high there. Okay, you see these equal highs? Down move, bullish move up through the highs. Price trades under it. Made a little bit of imbalance right here. Wick on the left. To wick on the right. This is our bullish candle up that grabbed liquidity. And we can enter at the open or the 50%. Obviously didn't hit the 50%, but came back, filled the imbalance. Filled the imbalance, came back down. And then we have this one, same thing, equal highs. Down move, bullish move up, price trades under it. And sell here as well. See, equal highs here taken out, hits our entry. So entry 1 hit, entry 2 hit. Price trading down. Very easy setups this week. Fortunately, I haven't been on the charts, but this is exactly what we should be looking for. But this is, again, that is seasonality. And you can look on here and it'll show you which months has, the best return or like the highest growth. So let's see. There was 2 months of 70. So February and June had the best growth overall. And then I'll show you like your max return. Like May, huge returns because huge moves. So I'm gonna give you all the login. Definitely want to check this out. There's a lot of cool stocks on here. But it basically will show you everything. So like the economy's data, like look, food market, healthcare, US employment situation, like it'll show you all of the averages and then what's happened this year. So here's the average, and then look what happened this year, obviously because of coronavirus. The blue's the average, and look how 2019 basically followed the average, but then the big pandemic this year obviously screwed all that up. But there's tons of stuff on here. The second tool we can use is our community outlook. I would say always follow the directional bias of the seasonality and the price action first, but you could also come in here and then look that wherever the majority of traders are going, you should usually do the opposite, but sometimes you will see like, look, AUD USD, everyone's been selling AUD USD, everyone's been selling. So like even our sell setups went in the direction as well. But you can see there's a lot of consolidation. We don't know how many traders are trapped in here, but that's just a good tool to use as well. What else? What I'm going to be looking for, though, which that next call we'll be going over the charts, I think we're going to get a bounce right here. So we have the lows here, that low there, and then all those lows there. So this down candle here, this is the candle I'm going to be watching for a kill shot. You see, bullish move up, down move to the low. You see how it was a nice double bottom here, but then they fucked everyone, right? Completely blew through the stop losses, hit the sell stop and the sell side liquidity under the lows, and then went up. Because I guarantee you, if you just saw this, you would be looking for buys. You'd say, oh, look, the low held, we have a double bottom, retail traders are buying. That's the double bottom, everyone's buying. And then they get obviously blown out. You can see, boom, wipes them out, and then trades back higher. But what we're going to be looking for is something like this. And we'll measure the 50% of this candle. Okay, there's 50%. There's the open. And you can see how we have these equal lows. Oops. We should be expecting price to take those out. We would like to see them take out the lows and then create a lower time frame setup. So maybe a 5-minute setup inside of this area. And then we look for the buys. Let's go look at Community Outlook. So they could all still be selling and we'll be on the buy side, right? So we should be looking for these buys on odd USD. Oops. Let's see. Here, while we're doing this, let's do this. Okay, so the username for the login. If someone will type this in the chat or copy this to Discord, my Discord's not working, but that's the username, and then PFX class like that is the password. Okay, so now you'll have access to this. Okay, all right, we're looking at AU. So we're gonna go to Forex tab right here. Australian dollar. What the heck? Thought I logged in. Oh no, I just changed my password. Okay. So let's go back. Forex. And then odd USD. So we're looking for that buy continuation, right? Which is going to be right here at the end of the month. That's what we're looking for. Right at the end of the month. So probably next week, right? Maybe. One second. The season trip for odd and odd index or specifically. So if you're on the Forex one, it'll be odd to the USD, and that's the one we're trading. I believe the other one is odd to what, S&P 500? Let's go look. We can go to currency. Because when you go to the currency ones, it's putting them Yeah, so relative to S&P 500 and relative to gold. But if we go look, they're kind of the same, right? That's the retracement at the end of June as well. Okay. But then again, myfxbook.com, you can go to community tab, go to Outlook, and that's going to show you where the majority of traders positions are. Well, not where the positions are, but the directional bias. So you can see there's 159,884 short positions on Euro USD. Average short price, you can see they're negative 154 pips. So we're just tying all of this together. You might want to go back over, our directional bias here was short from middle of June to right before the end of June, we were short. So middle of June to maybe it ranges here right towards the end of June, we find our buy setup. And it's not always going to be perfectly. It might be, 3 days off, 4 days off, because we don't really know exactly what days what on here. We're just looking at the overall direction. Beginning of month, bullish. End of the month, bearish. Start the new month with a little double bottom, continue up. Yes, just like a little gauge. Are there any other questions on that? I definitely want y'all to rewatch the recording, go through that AU setup, and then what I want y'all to do for the homework, you don't have to screenshot it or post anything. Just when you have time, go on to this website and then just compare some of them. Even if you go back, keep in mind during the pandemic, maybe from March to now, it might be thrown off. Some of them might be off because obviously there was huge, crazy stuff going on with the economies. But if you look at like January, February, before all that stuff, you'll be able to see how it follows it pretty close. All right, can I do it one more time because it's confusing? Yeah. All right, so let's look at GBP USD. So GBP USD, we're just gonna start. Let's just start in January. So let's just say middle of January to the last day of January. Actually, it's like over a little bit, right? So maybe January or February 1st or 2nd. So from middle of January to the 1st or 2nd of February, GBP is bullish. Okay. I use the 1 hour time frame to really look at everything. Okay, let's do this. So we're gonna go back to January. Okay. So we have a lot of just up and down consolidation. And then right here, you can see end of January, this huge bullish run up, this crazy bullish run up, right? That is this crazy bullish run up to about February 1st or 2nd. You see how it's off a little bit? So if we drop a line here, this high was literally the 31st. The downtrend started the next day, February 2nd. February 2nd, huge downtrend. February 2nd, look at this, starts this huge downtrend. All the way until about the middle of February, a pullback. Okay. February 5th, there's a pullback. But right here, about February 10th, here's your pullback. Okay. Price pulls up. You can even go to as far as to say, if we mark the high of this, that was February 1st or 2nd, to this, let's just call it this low. See how price retraced up probably like what, 40% maybe, somewhere up into here, and then pulled back down, started another big downtrend. So middle of February, well, a little bit shy, right? This is literally probably like the 10th right here. And then pulls back up, and then maybe like the, what, 14th, 15th, big move down. Okay, right in here. 14th makes a new high, or really 13th makes a new high, drops back down. Then starts this bearish trend here till about March. Look, right at about March, starts going back up. Right at March, starts going back up. So you can see how it's literally following the same exact thing it's done for the last 20 years. Again, this is, look down here, the 20-year range starting from last year. So obviously they're not going to have 2020 on there because it's going to do the average every month, and then at the end of the year, it'll add it to it, right? So from 2019 to the previous 20 years, exactly what GBP did last 20 years, did it this year. So now that you know this is your directional bias, that's when you would go in there and look for your sell setups. So very bearish all of February, right? So that's when you come in here and you say, okay, very bearish all of February. Let's just look at maybe this trade here. I don't know. Equal highs, bullish move up to the highs, bearish engulfing. We know we're looking for sells. We can enter at the open or the 50%. That's the 50%. Look at those entries. Here's your equal highs that got taken out. Again, bullish move up through the highs, grabs that liquidity. Here's where the liquidity is grabbed. Bearish engulfing. This is a sniper setup, and our directional bias of the seasonality was bearish. So we know we're looking for sells. There's your sell. That's all we're looking for. Maybe you caught, I don't know, probably not very realistic, but risking 15 pips and price came down 200 pips. Literally just looking for the setup and the overall direction of the seasonality. Does that make sense, Patrick, and everyone else? You'll see how GBP USD literally followed it day to day all the way down. Okay, and Harry, if we go down on low time frame for AU, is there a possibility that there could have been a trade? There's probably trades there's trades going to be all the time. These are just like showing you like the directional bias, but like on the AU, like even this, these highs, and then this is down, and then this bullish move up, bearish engulfing, you can sell the retest, perfect wick right there. There's always going to be setups. What if you look at GBP pairs, for example, and the time says bullish? What do you mean by the time? The GBP is bullish. So you said, what if you look at GBP, for example, and a time says bullish? I'm not too sure what you mean by that. If you look at the dollar during the same time frame, it's bullish. Or if GBP is bullish and US dollar is bullish, that just means GBP USD will range. That doesn't mean, GJ can't go up and UJ go up. Does that make sense? Remember, they're always paired against each other. So if GBP is bullish US dollar is bullish, then GJ will go up, UJ will go up, but GU will consolidate because they're both as strong as each other. So you get like, wait, do this one. Okay, so you get a bias like a sell. Yeah, so you're just looking at the seasonality for your directional bias, and then you go look at your price action, and you're just looking for liquidity and setups in the direction of the seasonality. And zing, zing. Aren't you concerned that there's equal high in the GBP short example? Which one? Or where at? Were you talking about like way back in January? Yeah, I don't really know. I was just, giving examples. If we're talking about January, or maybe this in February. So, like maybe these equal highs. Yeah, so there's 3 equal highs there. Yeah, I mean, it could have spiked up. But when this closed down, so that's the thing. This bullish move up, remember, we're not entering. It could go up and blow through those highs. We're not entering until it closes below. Once it closes below, that's when you're saying, okay, it grabbed enough liquidity here. This is the sell setup. And you're risking 15 pips. Our directional bias was sells. There was equal highs taken out. This is our institutional candle. So you're just, taking a chance, risking 15 pips. Well, some of them hit stop loss and go take out the equal highs. Yeah, but not every trade's going to win. Not every trade's going to be perfect. You wouldn't want to not take this trade because of that. And obviously you can see that was a perfect entry. So USD 15-minute. Yeah, so this could be like a little sell-off right here too. These equal highs, bullish move up, price trades under it. You can look for shorts here as well. So for it to take out equal highs, does it have to take out the wicks? No, I mean, as long as it's, price spiking above. So like even this is equal highs and this is wicking above. It doesn't really matter. But like the wick and the candle body, it's price action. So, you could look at a 14-minute time frame and it might be the candle body. And then on the 15-minute, it's a wick. Time frames don't really matter. It's just that's the price action that you're looking at. As long as price hits it, it hits it. That's why we're looking at the intention, because you could make any setup look good on whatever time frame. But yeah, I would say like it makes it obvious more that it grabbed liquidity when it's like there's equal highs, like equal high wicks, and then there's a big wick that takes them out, and then it like closes bearish engulfing, because that's showing you that it grabs so much liquidity above the highs with that wick that price pushed it back down, and then it closed bearish. So like for example, this. And let's just say you have equal highs. See how it looks super bullish, and it's so this wick is actually price action going up. Price is going up, 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 up. And then it starts getting all of that selling pressure, pushing it down, pushing it down, pushing it down, pushing it down to where it closes. All right, goes here, retraces a little bit, closes here, and then just boom, big down move. Because all of the liquidity was grabbed above the high, so it's pushing it down. See if Discord's gonna work. I'm trying to post everything for y'all, but it's not. Nope, it's not working. I'll be home tomorrow. I check out here. If you don't know, I've been at this resort and casino practicing poker because next week I go to Vegas and I'll be playing a bunch of high stakes poker there. So been trying to get some hours in and grinding, um, basically practicing in the casino I'm at. It has no service. It's like out in the middle of nowhere in Oklahoma. So haven't had service, but I'll be back tomorrow morning and I'll be able to upload everything. So the homework, you don't have to like post any homework, but I want y'all to go to Equity Clock, um, sign in with my info, and then start looking at how I would look from like January to February, and then look from like what, May through June, and then see how it follows price action. See which pairs. Remember, y'all have 3 pairs, right? See which one follows it the best, and then look for setups around those time frames. So like go to Equity Clock, and when price made that big high and started a downtrend, look for setups during the, let's just say, first of the month through the 15th of the month. We know it was going to be bearish, so go see if you can find that bearish setup. Can I show an example of a 5-minute entry? Okay, well, what you would want to look for, because I don't know any recent ones, but what we'd want to look for basically is when we go to the higher time frames here, let's just see if this one played out. I don't know. Might be a bad example because I haven't looked, but all right, so we would be looking for something like this. Replay tool. All right. So we know on the 1 hour, we want to be selling here, right? Because like I said, those highs on the equal, there's equal highs to the left, but I'm just gonna mark this one because I don't feel like scrolling over there. So bullish move up to the highs, price trades under it, right? That's our kill shot. So from the open to 50%, we can be looking for sells. And it's totally fine to put a sell element there, right? You can put a sell element at either one, whatever you want to do. And then stop loss above the high. But if we want to enter on the 5-minute time frame in real time, what we do is when price gets up there, that's when we want to look for an institutional setup. So what we would do is when price retraces here, we look for a setup. So let's just get price going up there. Okay, so price blowing through it. If you would have just had your sell element there, you would now be in drawdown. Okay, so we're not entering it. We don't want to sell yet. Okay, that would have wicked the entry. And then once this closes bearish engulfing, if we get a retest there, now we can sell. I haven't looked at this, so I don't know if it's going to retest or not. But what we would look for is now, instead of selling here or selling here, it was this setup happened in between that level. We would just be selling here, stop loss above this high, 9 pips, and then our take profit was down there. Let's see what happens. Okay, closed bearish engulfing, retested, right? A little bit of drawdown, half of this, so maybe 3 to 5 pip drawdown, and then now price going our direction. And then you can see that would have been our entry. So does that make sense? That's what we're doing. Instead of just entering on the higher time frame, we're looking for that setup inside of the setup. So let's go. So look at that. We had a 9 pip stop loss. And look, literally wicked it. So we had about 3.5, 4 pip drawdown, right? And look, really, really quick, price came all the way down here, 115 pips. Look at that, 1 to 12. So for every dollar you risked, you would have made about $12.50. So you're risking 1,000, make 12,500. again, like last calls I told you, that's where you're gonna make the big money, doing stuff like this. Okay, is there any other questions before I start that other call? Ushan, sorry, just joined. Could you please explain what we should do for the homework? So watch the recording, and then actually, I don't know if I'll be able to, I'm gonna try to upload the recording, and then the lesson was on equity clock. So I don't know how much you've seen, but equityclock.com, we're looking at the seasonality. So this is the 20-year average. Price action follows the seasonality. I think it'd be best to probably watch the full recording. I already talked about the homework, what I want y'all to do. You don't have to post it. I just wanted you to go back and look at your 3 pairs and compare them to the seasonality. Patrick, are we gonna go over this? Yeah. So we're gonna do that. That lesson will be with the trade plan lesson tomorrow. So we'll go over the lower time frame stuff tomorrow. Okay. Even if we enter on the 5 minute, we still target the equal highs and equal lows. Yeah, you're still targeting the same liquidity. You're just getting your a very precise entry. So I think we were looking at the 1 hour setup. Yeah, so we were looking at this on the 1 hour, and the take profit would still be the same. Which, well, I think we're like targeting this little imbalance here, or even somewhere down here. We know under the equal lows they grab liquidity, so somewhere in there is fine. Even taking profit at 120 pips. But yeah, targeting the same take profits as the higher time frame. All right. Well, I'm gonna hop off. I'm gonna try to upload the recording if I can get Discord to work. If not, I'll have to upload it tomorrow when I get home. But remember, in 13 minutes, I'm about to hop on that other live session in the PFX live group. So I'll see you all there.